I heard Warren Buffett today, Berkshire CEO and probably still widely considered the best investor in the world, who's in his, I think, late 80s now. And he's talking about, he was on CNBC this morning talking about how he knows that the market will be higher 10 years from now. He's thinking 10 years from now, even though he's in his late 80s, he's still thinking long term. So, it's important to try to keep your clients focused on that. And it's funny, we visit with clients that are at one of these 8,000 advisors sometimes brings their client or prospective client to our office to talk about how we could potentially help them with their financial situation. And just last week there was a NFL star that was in our office, first round draft pick from 3 years ago. I won't share his name just for confidentiality, but he had a $11 million sign-on bonus 3 years ago. It's been sitting in a money market earning like 25 basis points for 3 years because he's so terrified of the market. And he's 22 or 23 years old now. And it's like, you're telling this superstar, boy, if you'd had that money properly invested in a diversified portfolio over the last 3 years, instead of having 11 million, you'd have about 14 or 15 million dollars. But he's so terrified of it going from 11 to 5, right? So, and we're trying to encourage him as a 23-year-old person who's obviously in a very risky industry. He's one knee injury away from not having that level of income anymore, to have a long-term horizon, 30, 40, 50 years, that $11 million, you've got to really think about it in a long-term basis. So, and none of us would suggest him putting it in a big risky pot of investments, but you've got to be invested over the long term when you're at that age. It would be a totally different story, even though I do find it ironic, Warren Buffett, who's in his late 80s, I would probably have him more weighted into bonds and lower risk investments. He's still, I think, pretty much fully invested in equities at this point. So